Oops, he did it again. I think he did it again. Yeah, my new friend in dividends, my new friend in stocks, my very good friend in options, my new friend Brian. He may have done it again. Oops, I did it again. If we click through this contrarian trade here on the Citigroup on this video, should be probably your favorite new channel, The Wealth Snowball. Take a look at these comments. Brian Smith right here, my friend. City Roll Call 45. June 2nd. In the money call. Make them pry it away. The bear play. Wow. I think I like the sound of that, Brian. The old bear play. Roll it out, but down to collect some dollar bills, some premium. And then I was thinking, the other thing that it accomplishes is I collect the next dividend also. So if I get called away today on the city, I miss the next dividend. So let's look. I think it is ex-dividend date is coming up at the end of the month on Citigroup, but let's make sure. Click on the dividends here. And there it is. So April 28th is the next ex-dividend date. They'll pay out at the end of May, 51 cents. So on just, we're talking about one call contract, which represents 100 shares. So that'd be $51. So let's start doing a little math. $51. Where's your notepad? It's right here. $51 bills in the next dividend, right? And we can collect some premium. Where's our position? Here's our position now. And City's gone up some more since we last talked. Currently at 49.43. Hello, New York. Our call is at 47. Our position, though, is at what? 44.87. So we'll write that down. 44.87. Now, if we allowed it to be called away today at 47, right? $47 bills. I really don't have time to run through all the math with you because it may not be accurate, because I'd have to factor in the current premiums and et cetera that we've collected. But let's just look at this for a moment. So if we go to, because I want to see what the premium is going to indeed be by rolling that call out and down. Does it cover the gain that we would make just letting it be called away today? So at 47 today, minus 44.87 equals $213. Now, the other point, though, that is important is then, of course, any gain that is locked in between where we bought the share and where we sold it, that gain is locked in, and then the tax bill is like, Uncle Sam's like, okay, send it over. Send me my money, because messing with my money is like messing with my emotions. Uncle Sam didn't say that. That was Big Worm from the movie Friday. Oh, that's right. That was Big Worm from the movie Friday. So let's see. Let's just look. Where is our position? Right here. Right there. There's that credit spread we put on, and we made those 47.50 calls or puts disappear. So I feel good about that. Let's roll this position and see what we're looking at, what kind of dollar bills we would look on the credit to roll it out. Let's look at that date that Brian was talking about. It's 49 days out, June 2nd, rolling out and then down. So if we rolled out and down, we got to cover this debit today to buy that position closed, and then we sell to open and receive the credit. If we went to that 45, we would have a net credit of $247, which exceeds that $213 that we would have from the shares being assigned today at the $47 minus the $44.87 we paid, which is a profit of $213. So we would put $247 in our pocket today, and we would collect that $51 premium. So if we went with, I don't even know if this math works, but we'll do it anyway because we like to do the math. So if we went with the 247, right? 247, and we added the $51 bills, right? That would put us at 298, and this is still at 45. It's still 13 cents higher than what we paid, which would be times 100, which is $13. So that would be now $311 to extend this trade out. We would collect $311 more than we would have today from having the shares called away at 47. Now let's do our math. 311 divided by the initial investment of 44.87. That gives us 6.9% in 49 days. That's a big number. Divided by the 49 days, multiplied by, carry the 1, 365. Yep, that meets our 20% threshold. In fact, it is 2.5 times that at 51.6%. So guess what? Let's give it a shot. Can we collect the 247 though? Let's find out. See what that bid and that ask is on the Citi roll. Instead of letting them ravish our stock coffers and taking the 100 shares of Citigroup away today at $47, even though it's trading at $49.44, we can just roll it out and down for some more dollar bills and collect another divvy because we love those dividends. Covered call roll. We got a pretty wide spread there. So let's just see what we have to do to fill it right now. $2.47. $2.47, $247 bills. See if it can fill. Do. Where are you at? Why haven't you filled? Let's replace the order because I got another call from me lady. Is it showing pending or did it happen? Did it fill? No, it's still there. So I got a call from me lady and she said, the accountants want to meet with us. Wow, wow, wow. It's not funny. Well, laughter through tears, you know what that is. That's my favorite emotion. Laughter through the tears. Let's fill it again. Or try to fill it again. Continue. Covered call roll. We were at 247, I believe. Let's try 245. Oh, look how tight that bid and ask got in the meantime. Let's fill it now. 242. We'll take 242. We will. We'll take 242 to roll that. Come on. Yeah, there you go. That filled right away. So there it is. But we did get a call, or I got a call from my lady friend who said, yeah, can you believe it? The accountants want to meet. So there's only 2 reasons that they ever want to meet in person. Option A is really good news, okay? And you know what? The percentage of that happening is usually low. Or option B, really bad news. So it's one of those 2 options. We'll see what they have to say. Luckily, they're just right down the road from us, probably a 4-minute drive. So lady friend's going to swing by here from the office, and then we'll ride over together, meet with the accountants, and see what the news is. Hopefully it's just great news. And it's like, hey, not only do you not owe a bunch of money, the government's giving you a bunch of money. That's probably far-fetched. It probably is. But there we have it. Thanks a lot to my friend Brian for the suggestion on the roll. We'll keep an eye on that trade, but we did put money into our pocket. We locked in that next dividend, at least for now. I mean, we could always get out of that trade at a profit if we want, because if Citi starts to go downtown to Chinatown, then it puts us in a position to do buying that to close. We can roll it again. We can roll it back, whatever we want to do, but we can also let it ride and collect that next dividend. So checking in again real soon. Subscribe, like, comment, and we'll see you in the next video.